NVIDIA just held one of the most important AI events, and if you got anything out of it, it's just that the AI market is still pretty strong, and demand for AI solutions continues to grow at crazy levels. On today's episode, I want to do something different. Obviously, Nvidia is a big player in the AI space, but today I want to take a closer look at 3 different companies that I believe can also benefit from this AI craze. So let's take a closer look in today's episode.
I want to thank The Motley Fool for sponsoring this video, and check out fool.com/Jose for the 10 best stocks to buy now. With that link, you get a promotional offer for the subscription service. Now, let's continue with today's episode.
All right, so here we can see one of the most important charts that came out of Nvidia's GTC, and it's just that computing right now is at an AI inflection point. And we can see, based on some data projections from another company and from another research group, not Nvidia specifically, that the data center capex is expected to continue to grow throughout the years, and by 2028 is actually expected to be over $1 trillion. And again, Nvidia is going to definitely benefit from this. And as a long-term investor, right, I'm not taking these numbers to a true value, right? I don't believe in 2028 we will see $1 trillion. And I also don't expect every year to always be kind of a linear or exponential growth. But overall, during the long term of things, even if there might be little cycles here and there, I do believe data center expanding and just AI spending is going to continue. To just kind of give the information right off the bat, the 3 companies I believe can benefit from the AI space. And throughout the video, I will kind of explain why for each company is first Micron Technology, ticker MU. Then we're going to see Oracle, ticker ORCL. And thirdly, we are going to see Taiwan Semiconductor Manufacturing. Now, for each of these companies, you might be familiar with them, but I will try to explain a little bit more of the technology of why they can benefit from the AI phase. And kind of the first one is Micron Technology, and let's kind of just pull up Micron Technology right now. Micron recently reported earnings, and unfortunately the stock is down roughly 8%, sitting at $94. I personally believe anything under 100 for Micron is sitting pretty attractive, but again, for all these companies, it's very similar to Nvidia. The future of AI is going to really depend on price action. So Micron Technology, the first thing is AI memory. For those that are not familiar, Micron creates memory, and memory is used in everything from every type of device. Right now, the big important type of memory is called this HBM memory. And this is the type of memory that goes into your H100, your H200, your Blackwell, and all these AI accelerators and AI ASIC. And this is what has a lot of opportunity for the memory space. The HBM is not something that everybody can recreate, right? It's only a selected amount of people that can do it. Right now, there's only really 2 main players, SK Hynix and Micron Technology. Eventually, there is going to be another market where Samsung does do it. So what's going to be crucial here is for a company like Micron to continue to innovate and continue to improve those HBM, as it helps reduce the competition dramatically. Outside of HBM, every type of AI product from your phone, from your PC, needs special type of memory, or at least the most leading edge memory. And these are markets that Micron grows. As AI PCs continue to grow, your AI laptops, they typically need more memory than kind of the non-AI laptops. So I also have kind of a pretty simple understanding of HBM. So HBM is just a lot of memories kind of stack up together, and they're connected really close to the GPU brain or the GPU die. This is going to help a lot with kind of the communication and the latency, and this is what's crucial for AI, being able to transfer a lot of information very quickly. Now, the great thing about HBM is HBM actually, you need to kind of upgrade DRAM, which is another type of memory, but in this process of upgrading this DRAM to create HBM, you're actually using extra memory to create kind of the same memory. So there's about a 3-to-1 ratio where for every 3 RAM, you get about 1 HBM. So HBM right now is supply constraint for those reasons, right? There is that trade-off ratio. Now, Micron has shared a lot of great information. In their most recent earnings, Micron mentioned that they are uniquely positioned to capitalize on the transformation growth driven by AI from data center to edge devices. They also did increase their HBM total addressable market for this calendar year of 2025 to over 35 billion. And again, this means really good news as the HBM market is less competitive, so they do have some typical better margins compared to legacy products. And again, here we can kind of see that trade-off ratio. The CEO mentioned that they expect trade-off ratios to increase with HBM4 and then again with HBM4E when they expect to exceed a 4-to-1 ratio. And this overall increases the tightness of leading edge node supply and constrained capacities for non-HBM products. So the memory market is typically one that's very that you have to really balance the supply and demand, because it's something that can really kind of hit over inventories pretty quickly. But with the trade-off ratio like this is helping control that supply and demand balances for the consumer spaces. Now, if you want to learn more about the semiconductor market, definitely check out my semiconductor newsletter. It's completely free, whatthechiphappened.com. The link is down below. Now, the second stock I want to take a closer look at is Oracle. So Oracle, for those that are not familiar, is a cloud server provider. So we can see they have massive amounts of cloud solutions all over the world. And if we just kind of look at Oracle stock right now, Oracle stock is sitting at $152. And year to date, the stock is down roughly 8%. Now, one thing that we saw from the AI space is we're going to continue to see demand of AI solutions. And Oracle provides a nice amount of data center solutions, and that infrastructure is growing at rapid levels. Now, if we look, they have amazing cloud native AI customers. They have a lot of great offerings from the GB200, from the B200, the H200, and the list goes on and on. Now, we can see this is from their financial analyst meeting that happened in September. They had about $99 billion in total RPO, which is remaining performance obligations. And these are contracts that have been signed. This is growing at amazing levels. Now, in their most recent earnings, that jumped an extra $48 billion and is now $130 billion, up from that 97 last quarter and up from that 80 billion last year. And this RPO figure, this huge growth, is a leading indicator of demand for their cloud services. If you have heard of all these other cloud providers, you are seeing that they are more supply constrained right now with demand. More importantly, these does not include any contracts with Project Stargate. And Project Stargate is that massive AI training project that they're building with SoftBank and OpenAI. And that's going to be another massive amount of customer in RPO solution. They also expect their available power capacity will double this calendar year and triple by the end of next fiscal year as they bring more capacity online, and their revenues will clearly accelerate both for AI training and inferencing. This is one of those companies that can benefit dramatically with AI workloads continue to grow. Like I mentioned though, all these companies are very important if and can really benefit if the AI market ticks up. Now, if the AI market slows down, that is a whole different story. So that is a major risk to kind of consider. Now, the third company we're going to look at is TSM, Taiwan Semiconductor Manufacturing. Right now, the stock is sitting at $176. Now, for those that are not familiar, Taiwan Semiconductor Manufacturing, this is the company that manufactures the chips. Nvidia's H100, H200, B100, B200, B300, they are only possible because of TSMC. Now, we can see their advanced manufacturing nodes are pretty much a bulk of their total revenue. That's the 5 nanometer, right? The H100, even some of the Blackwell is created on this 5 nanometer technology, which is also 4 nanometer. Upcoming products are going to be in the 3 nanometer solutions. And this is where this company is making a lot of revenue. The great thing for all these players, especially Micron and Taiwan, is it doesn't matter who wins the AI race or who loses in the AI race. As long as there is an AI winner, they're most likely going to be buying memory from Micron. They're most likely going to be creating manufacturing solutions from TSM. This is another segment that can benefit from AI as you are adding more chips, more components to your laptops as they become more AI solutions or AI laptops or AI PCs so they can benefit from the smartphone, from the HPC, and similar to all those chips going into other solutions like IoT and the automotive segment. Now, Nvidia recently announced a pretty cool product during GTC. Outside of their crazy kind of roadmap that they have, and again, this roadmap is only possible because of TSMC, they also did announce a pretty cool co-packaging optic solutions, and this is mainly manufactured by TSMC. So TSMC is such a crucial partner that it makes no sense not to be on the list of great winners from the AI space. Now, I mean, we can take a closer look at their most recent earnings, and the CEO mentioned that even after tripling their AI revenue in 2024, they forecast their AI revenue from AI accelerators to double in 2025 as the strong surge in AI-related demand continues. And this is even after that this company is still very tight in capacity and can still not even meet customer needs. So overall, very good commentary from a lot of these companies dealing with the AI space. So let me know what are your thoughts. Take care, have a good day, and see you all next time.